Hello, everybody. So yesterday, Enphase reported its earnings, and I'm just getting to them because it was the same day as Tesla. So I listened to Tesla call, finished listening just now to the Enphase earnings call, and I am fully confident in the stock. This has boosted my confidence in the stock. Right away, let me tell you the most important thing from that call, which is Badri, the CEO, told us once again that the inventory in their distribution channels, that inventory will be normalized by the end of Q2. And he reiterated that's the second quarter that he reiterates that. You may remember that 2 quarters ago, this stock took a major dump down to the 70s because Badri put it all out and said, look, it's going to be bad. We were too optimistic in 2023. We overshipped, we over-manufactured our products, and now we have to do this inventory reduction. So that means that the inventory reduction is still as stated by the end of Q2. So next quarter will be the last bad quarter for Enphase, and then we will resume the growth and return to the growth. And in fact, when you look at the sell-through in the distributors, I'll get to this in a second, we can see that the growth is picking back up in Europe quite intensely. And so the growth for Enphase will come back. I have very, very little doubt about that. It's a matter of them having been too optimistic in 2023 about their sales, and that has everything to do with the interest rates, right? They didn't think that not thinking about raising rates, right? What Jay Powell said. They thought they could trust the Fed, the chairman of the Fed. That's the story of the economy. That's the story of the layoffs that we see right now. That's the story of the American economy. That is just the general story here. Is companies had plans, and of course the interest rates raising 20-fold. It's put so many companies in trouble. Enphase was kind of part of these companies, just like Tesla. But of course, interest rates will drop. Remember the Churchill quote, this too shall pass. If you remember at the peak of 2020, 2021, it felt like it wouldn't stop, and it stopped, and the rates will drop. They don't have a choice. They will drop at some point, and companies like Enphase, company like Tesla will benefit from the pent-up demand that will start showing up in mass. And really quickly, why do I cover Enphase on this channel? Well, I'm interested in stocks with high alpha, right? I'm interested in the best performers because my goal is to beat the denominator, right? My goal is to beat monetary printing. And so for that, I have to look at stocks that perform really, really well, preferably much better than the NASDAQ, because the NASDAQ, even the NASDAQ, I mean, it's a tiny real return, but even that is not enough if we have 20% inflation, right? So Enphase right now, $107. That's a pretty cheap company. It's funny. The report, in my view, was really good, but the reason why the stock is down is, of course, the yields are up today. So again, that stock is down for little reason related to them. And quickly, just to show you why I cover Enphase is, so this is as far back, right? Enphase went public in 2012. This is the performance of Enphase since 2012. So you can see it's not quite doubled the Nasdaq on an average annual return basis, but it is significantly higher than the Nasdaq. It's returned 25% each year over the past 12 years versus 16% for the Nasdaq. And of course, if you look at the total return is almost 3 times the Nasdaq over that period. So we're in rarefied air here. We're talking about a really high-performance stock, and of course, keep in mind that the valuation of Enphase right now is obviously, in my view, very depressed compared to what their fundamentals suggest, and compared to where they will head back. This is a company that I think will get back to all-time high at some point, and then we'll get into some sort of price discovery and see how high this company can go. This is a matter of a few years, in my view. As soon as the rates drop, this company will come back because they're doing very well on the market share. It's a market thing, but they're gaining market share. They have excellent net promoter score, and they have, and I've covered this multiple times on the channel, but they have, in my view, the technically superior solution for the inverter part. The micro inverter, in my view, is the technically superior solution, right? I'm not talking about the home batteries. The battery for your home, the home backup batteries. Yes, it's pretty evident in the marketplace that Tesla is winning that game, but Tesla is not winning the inverter game. The inverter game is being won by Enphase by a long shot, and as well as the subsidies games, which is funny because some could say in the early days Tesla was very good at getting carbon credits and all of that. The subsidies game, Enphase is winning that game, and I'll get to that in a second as to why they're winning that game thanks to the IRA. It looks like the IRA was written to tailor-fit Enphase. So this company is seeing, of course, pressure right now because the rates are high. Look at the 10-year yield. It just keeps going higher and higher. And the government who keeps spending, I saw the news this morning, the Senate passed some bill, $71 billion or something. So the government keeps spending. The market is getting scared. What's going on? You keep spending the money, but there is no money. So the interest rates are going, but it's all a bluff. The Fed is going to have to drop the interest rates. There's very much no doubt about this in my mind. Otherwise, we're going to see such a complete collapse of so many stocks, so many companies, so many local governments that it's not going to be possible. They're going to have to drop rates. Remember, the Fed has a dual mandate. The dual mandate means, controlling prices, but also controlling the job market. And when companies fall, when mass layoffs are announced, that doesn't help the job market. So just keep that in mind. Anyways, so the rate is the big story. And that's a short-term story, I would argue. The drop of the rates is a short-term story, short-term catalyst for Enphase. And a more long-term, but we'll see how long-term it really is, might be shorter-term than I think, but a more long-term thing is AI and electric vehicles putting a lot of pressure on the value of electricity. The cost of electricity is likely going to go up all over the world by tons because there's huge demand to a lesser extent from EVs, but to a major extent from AI. These data centers are using so much energy, they're going to be competing for that power that our utilities provide. So utilities will raise their rates, and the more utilities keep raising their rates, the more solar gets compelling, especially because the cost of these solar cells just keeps dropping and the solar cells keep getting better. The economics of solar panels are very similar to the economics of flat screen TVs. So we really have a lot of tailwinds for a company like Enphase. And if you read, one of the most interesting books I've read is the book from Mustafa Suleiman about AI. And it's realistic that we'll see maybe a 3x in the cost of electricity within 2030, by 2030, because of the high demand for AI. And so that electricity is going for its highest base use. It's going to AI. It may even go to things like Bitcoin mining as well, who they may be willing to pay more for electricity if the price goes up. So electricity is in very, very high demand. It's going to keep being in high demand. Think about also replacing human labor more and more, replacing, organic, biological labor, replacing that with electric labor, right? Those robots we talk about, they're powered by electricity. The demand for electricity is only going to grow. And that's a secular trend. That's a secular shift. And your roof is valuable. That's the product that Enphase is offering. Monetization of your roof. Also, if you live in the US, I don't know if you've been in the roofing space, if you've asked a roofing contractor how much it costs to replace a roof these days, but it's actually much, much, much higher than it was just 5 years ago. You wouldn't be surprised for a normal-sized home to see a roof cost, $30,000 to $40,000. That is not that surprising. And so if you look at that cost, then solar all of a sudden becomes much, much, much more compelling, especially if you have an integrated solution. So this is a bigger conversation. I want to focus on the call. Sorry about the tangent here. Let me focus on the call here. So some of the takeaways is the distributors their sales are roughly flat. They're actually down in the US, and so if you look at the overall number, so the sell-through, right? What matters for us for Enphase is you can't look at the revenue of Enphase or at the shipment of Enphase because they don't sell direct to the consumer, right? They sell to distributors who sell to installers who then sell to the final consumer. And so therefore, they're two steps removed from where the revenue happens, but they have visibility into their distributors' sell-through. And so the distributors, depending on where they're located, they're either growing or flat or down. But what I'll get to in a second is I'll go through a number in a sec. But keep in mind that Enphase's actual number, if you look at the data published here, that drop, much of that drop is due to the fact that they are letting their distributors sell their inventory. So they're under shipping right now. They are under shipping. If the distributors didn't have any inventory, that line right there, that 2024 candle right there would be much closer to last quarters, much closer. But it's not like that because they have to hold back on inventory. So the U.S. Down in the U.S., the sell-through all over the U.S. is down 23% quarter over quarter. Much of that is due to California, actually, and a major backlog in California. Keep in mind, this company is still mostly U.S., but that's likely going to change this year. At the end of this year, I wouldn't be surprised to see rest of world be bigger than the U.S. And for Enphase right now, Europe is a top priority. They're gaining share, growing very fast in Europe. So the US, the sell-through at distributors, again, not Enphase's numbers, distributors' numbers, is down 23% quarter over quarter. But look at Europe. Europe is the exception for Enphase, the growth exception. Of course, in Europe, rates are a little lower, but that's the big growth curve for Enphase. So the Netherlands, there was a big political turmoil in the Netherlands related to solar, and so that's why their sales are down quarter over quarter. But the government has decided to support net energy metering, that is, using the grid as a battery. And because of that, Enphase expects a lot of that pent-up demand that people were waiting because of political turmoil over there related to solar. The demand's going to come back. And so they're expecting strong demand in the Netherlands now that the issue of NEM has been figured out over there. In France, the growth is expected to be 13% year over year, and that's pretty good in winter, and Germany is even better in winter. But the major growth is expected there, and they're winning in that marketplace over there. Very underpenetrated market for residential solar. They will also win, in my view, over there. And when I look at Germany, Germany is absolutely outstanding, and that probably has to do with some of the geopolitical tension and the cost of electricity. Whether in Germany or France, both of them are going to see major spikes in electricity. France has already announced theirs until 2025. I don't know about Germany, but they're going to see major rise in electricity costs. And for that, Q4 23 to Q1 24 is plus 28%. So the hyper growth is expected to actually go from strong to hyper strong, to kind of quote Badri in the call, because they are introducing more three-phase products, including a battery later this year in Germany, which is going to be very popular according to the CEO. So Europe, and I didn't put other markets in there, but Italy is looking like it's going to be a great market for Enphase. Europe is a beacon for growth for this company, despite the difficult interest rate situation over there and in the US. And I think in the US, we'll see the same thing. The technology is there. It is a superior technology. It is free electricity. That's what it is. Once you have it set up, once you have it installed, it's free electricity. You're paying for your install with 2 days upfront cost. And then you're buying electricity for the next 25 years. These products are guaranteed for 25 years, but we have examples of these panels lasting much longer than 25 years. Many panels installed in the 70s are still going strong today. And so it just makes so much sense to me. I don't know how many different ways I can say it. It makes so much sense that every single roof should have a solar panel, and you should make your electricity for your cars, for your home, and we should move from a consumer model where we buy electricity to the grid to a producer model where every single home at the end of the day can resell some electricity to the grid. And it's part of it, like a greater movement between centralization and decentralization, which is decentralization of power production. That's kind of what a system like Enphase is enabling. So moving back to down-to-earth stuff, talking about California. So of course, Enphase is a single-issue stock on multiple issues, on two issues actually. It's a single-issue stock. One of them is interest rates, right? The first thing they say when people criticize the stock is, oh, interest rates are high, thus Enphase is bad. That's one aspect. Another aspect is California, and sure enough, sometimes when you listen to the conference call, you would forget that there's other places in the world than California. You would forget because it's like still the analyst questions are still mostly about California. Yeah, California is a big market, but come on, it's not the only country in the world, and this is an international company, even we're California based. But specifically talking about California, the CEO sees California as a catalyst, and he's been contradicting the analysts on this for the longest time. He much prefers NEM3. So NEM3 is a system where they buy back the electricity from you at a much lower cost, aside from certain days out of the year where they pay you a much higher cost for your power. And California in NEM3 battery is a long-term thinker. And he actually has always said that it's better for them because thanks to NEM3, they can sell batteries and they make a lot of money on batteries. And in fact, an analyst asked about a question about a lawsuit to repeal NEM3. And you can hear on the call that they're not excited about that lawsuit about repealing NEM3. And the reason why we're not excited about that lawsuit is because if you actually look at the numbers, in California now, new installs have a 90% battery attach rate, right? And selling a NEM3 system creates 50% more revenue for Enphase than selling a NEM2 system. Plus, remember that battery manufacturing is coming to the US in Q3, and that's going to be subject to more subsidies as they manufacture these batteries in the US. So when I talk about this is a subsidy play, they're gonna be getting battery subsidies in addition to microinverter subsidies. So think about that. And also, they also love California, and that was kind of funny on the call. But there's a law in California that says any new home, any new build needs to have solar by law. And of course, Enphase is going to capture its fair share of that law, right? When people build a new house, well, you don't have a choice. You got to put solar on it. So what do you put? Do you put Enphase or do you put Solar Edge? My guess is people are going to pick Enphase because I think it's the superior solution. And if you do your research and if you build a custom home and you spend a lot of time researching, I think you're likely to choose Enphase because the benefits are clear when you look at the tech. And so it's rare to find a company that has the government be such a tailwind. Like this is a company who has and Tesla is kind of like that too, but Enphase is perhaps Tesla on steroid when it comes to the government tailwinds pushing this. I mean, you have a government who literally, forces your customer to buy your product. Like California is literally saying, if you build a home, you have to buy solar. You have to. Like that's as good as it gets. That's as good as it gets. And then they repeal another system that says, oh well, if you have solar, you're most likely going to want a battery because otherwise it doesn't make any sense. Talk about. I mean to give you a comparison, it's just as if you were Starbucks and you had the government forcing every single American to buy Starbucks. You have to buy Starbucks. It's like this is kind of a business here for Enphase in California. You have to get solar. So, anyways. Enphase is still a major IRA subsidy play, and they are doing their shift. And I guess it's too bad for that manufacturing plant they had just opened in Romania, and they were all happy about it. But the IRA money is the IRA money, and so they are shutting down that Romanian plant. and they're going to be shifting all of their manufacturing to the USA. Most, at least, they're going to start with 2/3. So they said 2/3 of their microinverters will be made in the USA towards the end of this year. And my guess is, I mean, could they go 100%? They could totally go 100%. I mean, I don't really know. I don't really know what would prevent them from going from going 100% made in the USA. You know, these microinverters. Keep in mind, they're much easier to manufacture than string inverters. You know, string inverters, you got a lot of screws, and you got a lot of manual labor, and you got a lot of soldering, and it's a labor-intensive process. Microinverters, they're just PCBs. So you have these giant machines who just place the components on PCBs, and it's all very. I mean, manufacturing is very, very close to manufacturing a phone. It's much closer to manufacturing a charger for a laptop than it is to, say, manufacturing a big, bulky type appliance like a string inverter, and so they can achieve a scale that allows them to have a very, very small labor component and mostly an automated manufacturing component. And I don't see any reason why they wouldn't shift their manufacturing to the US even more than 2/3. You know, the IRA subsidy has almost been written just for them. 11 cents per watt AC, that's the benefit, and it's a top priority for Enphase, of course, to manufacture high-powered inverters. And of course, when the IQ9 is coming, you know, they will retire the IQ8, and you will not be able to get the lower power inverter because Enphase wants to get the subsidies, right? So they're not going to sell you the low power microinverter. They're going to sell you the IQ9, and they're working on the IQ9. And to quote Badri, same IRA benefit, of course, 11 cents per watt AC, but you have a higher power at a lower cost of manufacturing. And IQ9, one of the big reasons why IQ9 is winning, and I've covered a stock that actually is a supplier of Enphase in gallium nitride, but that's going to be made possible with gallium nitride GaN chargers. If you own a GaN charger for your phone, you probably intuitively know the difference and the superiority of GaN technology versus regular technology. It charges super fast. And that, again, is gonna remove a lot of costs and gonna eliminate the need for transformers. Enphase, granted, has many transformers in their microinverters, but that's gonna eliminate that need even more. And they're going to be able to make very powerful microinverters that are suited to get the subsidies. So let me just get into the numbers and why this company is so exciting to me. So looking at the call, so when you read the call, we know their goal towards the end of the year is to be making 5 million microinverters per quarter in the US. 5 million microinverters per quarter in the US. So that is 20 million microinverters per year. They're not there yet. They're working on that. They'll be there in Q4 2024. Assuming the most common microinverter they sell right now, which is the IQ8 384 watt AC. So assuming they sell that version of microinverters, that's 11 cents. So that means $845 million per year in IRA subsidies. Okay, then moving down to the IQ8P, which is their commercial product, but I'm just using this into a foray into what may come next. Their most powerful in microinverters right now is 480 watt AC in a very similar form factor. Granted, those are teeny tiny bigger, but not that much. With GaN, they'll be able to keep the exact same form factor. But the question is, what's going to be the power of the IQ9? Right? Is the power of the IQ9 going to be 500 watt AC? Right? If it is 500 watt AC, then you're looking at subsidies of 1.1 billion USD. And keep in mind, for this company, the subsidies start getting phased out. This is crazy. In 2033. And they will get the last subsidy in 2035 because there's a 2-year phase out period. So, I mean, the net present value of future subsidies is probably higher than the enterprise value of the company today. The net present value of future subsidies is very likely, in my view, higher than the EV enterprise value today of this company at 40.5 billion. And I could also make the case that the company is trading at 13x forward IRA subsidies. And I'm not even including the battery subsidies, and I'm not even including them growing their sales. And to tell you, if you look at government bonds, the traditional finance, they put a premium on government bonds. Like same for defense contractors. There's a premium on defense contractors' stock. Why is that? Because the government is considered to be the most reliable payer. It's the best payer. And so to quote Mandy two calls ago, she was responding to an analyst. Mandy's the CFO, and she was like, "Oh yeah, we get it. IRS direct pay." With a happy voice, IRS direct pay. So if you got a company who's going to be getting $1.1 billion USD maybe next year in IRS direct pay, I like I said, I can, in my view, the market is mispricing this company, and I think it's a cheap stock. I'm very happy to own it. It should be higher than that. I mean, isn't Costco trading at like 40 times earnings? Anyways, so. And of course, and this is the gist here. Of course, is when growth resumes, which I believe it will. I don't see why it would not. What all bets are off when growth resumes. Because what if they start making 30 million microinverters, 40 million microinverters, right? So then you start doubling the IRA benefit. And keep in mind, they also make a bunch of money without the IRA benefits. So without the IRA benefit, they also make a bunch of money. And that's the more quote-unquote boring way to look at it. And you're already starting to see a divergence between their gross margin with IRA benefit and without IRA benefit. But the IRA benefit, my guess is from looking at the direction and from my own calculation, you could get to a point where half of the margin on these microinverters comes from the IRA benefit. But a more boring analysis, if you look at the numbers right now, the stock is trading at 22 times free cash flow, 24 times PE. So all in all, cheaper than the S&P, right? When this company's really comparison should be the Nasdaq, not the S&P. All in all, this company is trading cheaper than the S&P as a whole, but that's being the uncontested leader in the space. The revolutionary player in solar. It's in my view, again, that's just my view, but in my view, it is the most premium stock in that industry. And so it's cheap if you're buying the most premium stock in that industry. These numbers are cheap. Anyways, that is what I think. So a few final notes from the call before I tell you that I like the stock at 106. And I've actually added a little more, and I'm going to see how much more I want to add to this at these levels. But I've added a little more this morning because I liked what I was seeing. But a few more points. So battery reiterated the superiority of their products in terms of serviceability and how serviceability is essential. And talking specifically about the batteries. So if you have a claim on a battery, you typically need to ship a very bulky battery back to the manufacturer, and maybe they change a board and they ship it back, and that's 2 days worth of work for an installer. If you have a problem on an Enphase battery, it's typically as easy as an installer showing up, opening up the battery, switching a PCB, right, or switching a microinverter very easily and changing that in place, and it's a 1 hour call. So that is one of the benefits of the product, highly serviceable. He also noted that they're doubling down on Europe. One of his lieutenants, one of his top managers, is actually moving physically to Europe to handle the market. So they're really, really focusing on that market. So it wouldn't surprise me if Enphase becomes a mostly European company, which then would create very interesting. It'd be a very interesting scenario where you'd have U.S. subsidies financing microinverters mostly go to Europe. It'd be very interesting. Anyways, and then. He reiterated, and this is something that I've noted multiple times in my technical videos covering Enphase, is installers don't like to work with DC. And And of course, if you have the same voltage, DC and AC, same voltage, of course, AC is going to be riskier because, AC has spikes in the power. But the problem is DC is on a string. So you can have thousands of watts on a string. And so that doesn't forgive, right? That can be very, very dangerous. And that's why these DC cables can get really, really large because of the way string inverters are working. This is not as much of a problem with AC, which is why battery refers to it as safe AC. Because, even volt for volt, DC is supposed to be, safer, but it's not volt for volt. That's the thing. AC, it's going to be grid tied, right? So it's going to be converted. In the US, it's going to be 115 volt. In Europe, 220, 230 volts. Not the case for DC. DC, you can have 800 volts, 1,000 volts, and installers are fearful of that. And so that's also a big plus as to why people are choosing for the Enphase products as opposed to the string inverter products, which are more of a legacy products. So in conclusion, I like the stock. I like Enphase at 106. Seems like the drop today is due to the yields. This is a stock that the market is going to keep ignoring for perhaps this full year until one day, at some point, it stops ignoring that stock and the market re-rates the company. That's kind of how I view it. I think it's going to have a very, like a kind of a staggered ladder type growth where this type of stock does a bunch of nothing for a few years. It does a bunch of nothing, and then all of a sudden you get a 5x or a 10x, and then you're going back for a few years of nothingness, and then all of a sudden you get another 5x. That's how I view this type of company. Highly misunderstood, but I'm happy to own, and I'm happy to buy it at this discount. So this was no financial advice, no investment advice. This is just entertainment. I'm hoping you were entertained. Please like, please subscribe. Thanks for watching, and have a wonderful day.